Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Tuesday, September 3rd, 2013. And as always, this is brought to you by Triton Wave Consulting, which is the home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. All right, well, I hope you had a wonderful and safe holiday weekend, Labor Day weekend, for those of you in the United States. And I want to first take a look at the S&P futures. This is a continuous contract, ES pound F, space pound F on E signal. And let's take a look at what's going on here. Big picture, T1, lower lows on the candles all the way through, regardless of what happened over the weekend. We're right now up 1475. We were up 17. Let me see. We were up almost 17 points. This is continuing down. This is continuing down. Okay, this is below zero on T1. Half of T2 is below zero. We started to get this trend down. We still have a trend that's in place on. Let me do that over again. It doesn't look right. Let's start from here. Okay, as long as this is not breached on the 21, which is this little blue line right here, we're still good on the downside. Make no mistake about it, this was a geopolitical reaction against the threat of war, of the United States going to war against Iran. When it was delayed because the Obama administration wanted to wait for Congress to approve it, this jackknifed up 13 points on the opening on Sunday, and then it continued into late Monday when it opened up again at 5 o'clock. Was up 17, now it's up 1475. This, to me, is still a down move. This is the trend here to the downside. We should continue on the downside. I still see right here 1603 on this exponential moving average. If we break this down a little bit further, you can see how strong these overhead EMAs are. This cluster right here, this cluster right here, and this is all below zero. It spiked up just a little bit here at the peak. It wasn't, you really couldn't play this on the 144, but as soon as it hit this cluster of EMAs that were all converging down, and then it moved up, and this little bit right here is what happened, is all geopolitical. And you can see, if you look at it as I expand this, this is already starting to come down, even though this part is above zero here. So I fully expect this to come back down, breach 1630, and then go lower. On fundamentally or economically, not fundamentally, but economically all over the world, Stephen Roach, Yale University economist, said that the global economy is in the early stages of another crisis, and it was the tapering talks that not only brought this market down sideways a little bit and down some more. Remember, this is all geopolitical right here. The threat of war that scared people, and then they figured everything was okay. But everything's not okay, because the taper talks have triggered a crisis in the markets of India, Indonesia, Brazil, South America, and Turkey. Okay, let's take India. India is living basically high in the hog with big current account deficits, and they've basically ignored their structural problems. So if there is a let up in QE, they are going to get hammered. So the rupee and the Indian rupee and the Indonesian rupiah have been down, are close down to like 31%. Also, comparatively, 1998, the developed world, the developed countries were two um, GDP um, percentages ahead of all the developing countries. And now in 2013, the gross domestic product of the developed countries is now equal to all the developing countries. So any hit on a slowing economy or a softening of the QE position will bring down the developing countries, and in turn, it'll be even more catastrophic for all the European nations, for the United States. Here's a daily snapshot of Apple um, going up. You can see that T2 went above 0 right here, T1 went above 0 here, so any of these moves down to support were a buy. Uh, I did not play this, but I'm getting ready to. I like the fact that this is above 0 here, and this is just going above 0 now. However, Apple may still come down to this area before it continues its move up. If it's going to continue up, it's going to come back down here before it goes back up. So the daily might give you a trend, but it won't give you. Let me see here. It won't give you intraday plays. You know, like day trading plays. That doesn't either. Let's go to another chart. Let's go to a 610. See if that gets you anything. Okay. Well, that's still going to be loading. My computer loads very slowly. All right, so when T1 went above 0, this is like the 610 tick chart, which I like to use on Apple, and I like using the 144 also. 610, 377, and 144. So that moved up there for this little play here. That's about a 10-point play. And when this moved down below 0 right here. Again, I did not play this, but I'll show you. Hang on. Okay, this is Goldman Sachs, and oh, I thought I had the daily up here, sorry. Whoops. Let's do this again. Okay, this is Goldman Sachs on the daily. Now, Goldman Sachs has been skipping around 0. It went below 0 right in this area right up here. Okay, so this is now T1 is below 0, T2 is below 0, and I'm waiting for this to break right here before I make a call on it, because it's held. Okay, so you can see where the cross is. The 8 and the 21 crossed. 8 crossed the 21 on the downside, and they both crossed the 55 right here. That's definitely a sell signal to me, but I wanted to wait until the weekend was over to see if we could get better prices in here. It may just continue to go down. It looks like it wants to go down to first 145 and then 138. So we may have a play on that on Monday, on Tuesday, sorry. We'll have to wait and see what happens with that. On smaller time frame charts, which is what I'm looking for, like on the 21 on Goldman Sachs. Let's see what that looks like. I'm actually using a different time scale on that. Let's see here. I'm using a day only. Okay, on the day only, these are all basically below zero on the 21-minute cash, and so this may perk up just a little bit on the trading on Monday. This to me would be a good time to get in Goldman Sachs. On the 144, if we look at 144 tick chart on that, it's a little bit easier to see. Let me get a pen in there. Okay, so it broke above zero here, and right here, and below zero here. So these are like daytime trading situations. They're only good for like 2 or 3 points. That's why I don't use them very often. And down again here, which is only good for 2 points. So it's like very, very short, sweet. These are better to use when you're getting closer to expiration, but expiration still has about 3 weeks to go. All right, let's look at something else. One more thing here. Okay, I wanted to cover gold on the 377. Actually, let's take a look at the daily and see where it is. The daily on gold actually looks like it may want to climb a little higher. I'm not sure about this. It came down and hit this strong EMA here, and then which was resistance here. It came up to the 80, but that's the 144 in combination with the, oh my goodness, what is that? I forget which one that is. I think it's like the 610. I don't remember. And it came up, slammed against there, and came back here, down here on the threat of, actually it screamed up here on the threat of war, and then came back down here on the on war being negated. And this actually could really turn into a war. It's not as it's not as cut and dry as it would seem. But let's take a little bit smaller look at gold here. Gold actually, it looks like it's building a base to take off here. This is T2 is now above zero. If it does, it could actually sling all the way up to 1500. But let's take a look at the closer ones, because these are longer term plays, and you could easily get, unless you have like a 50-point stop, you're going to get stopped out. So let's look at the ones that are more reasonable to play, and I'll show you why I decided not to play these. Because as soon as there was any talk of war, and this is all in the last three, this is all in the last 3 days. As soon as there was any talk of war, which was like back in here, I decided that there was so much political intrigue going on that any announcement by the Obama administration would send this one way or the other. Even if you were right, you could be stopped. You could be wrong because you were stopped out in 3 minutes' time. So, in hindsight, this is what happened, you know, and you got this play, and this announcement right here happened right after 5 o'clock on Sunday. It did not play this, and I'm out of it. I'm waiting for things to settle out. I don't like surprises. There are moves in the market that happen every day. Shouldn't be no sense in putting yourself in financial jeopardy to do this. So we'll just have to wait and see whether the firestorm of political and bashing stops in the Middle East, or whether it's going to continue. So we're in a very tenuous position here, because any kind of launch of missiles going into Syria could actually, in the worst scenario, escalate into a world war, which nobody wants to see happen. But one of the reasons why England backed down from supporting the United States on a first strike into Syria was because England granted export licenses for potassium fluoride and sodium fluoride into Syria to, it's not known whether it was for the rebels or for the government forces. They are capable of being used as weapons, being made into sarin, which is the nerve gas that was unleashed on the Damascus suburb. Also, politically, in that area, Saudi Arabia is building up resources of gas, which they have hundreds of billions of cubic feet of, and they want a pipeline into Europe. And right now, the Russians hold the pipeline into Europe, and Damascus and Syria is the tipping point of whether the pipeline goes from Saudi Arabia into Syria into Europe. So basically, that's why Putin doesn't want the United States into helping the rebels, because that means that the Russians would lose their hold, their grip on the gas pipelines and all the revenue that's going into Russia because of the gas they're supplying to Europe. So, I hope I didn't confuse you, but there's more than what meets the eye on the surface of what's going on here. Don't get caught up in the political rhetoric of who's on the right side here, because there are no right sides. It's not politically motivated. It's basically all economically motivated. I hope you enjoy the rest of the weekend, and I will see you at the next update, and good luck trading. If you would like to get in touch with me, I am Rodney Julian at Triton Waveguy at gmail.com, and you can become part of our trading team. I send out hot messages as they come out on the waves, as the waves indicate buys or sell on certain stocks and gold and the ES. Have a great trading day and a great trading week, and enjoy the rest of the holiday. Good night.